He's from a small town in England called Basingstoke and started trading with just £2,000. Now he's managing a portfolio of around 100 million. Hey guys, today we're going to talk about Jaynemesis' portfolio. He has a $100 million portfolio on eToro. I came to know about Jay through the Lewis Morgan podcast, and this guy has an absolutely incredible story. First of all, he is an absolute legend. For those of you guys who don't know the whole story, this guy used to be a esports gamer online and also used to be an events coordinator, and now this guy is making an absolute killing on eToro and also making people a killing as well. Now guys, let's talk about eToro for a second here. eToro lets you copy the exact trades that Jay is making. Basically, Jay does all the work and traders can just hit the copy button and just let the funds come in. A quick introduction to myself before we get into this. My name is Jack. I make all kind of videos around the stock market and personal finance. So if you want to see that type of video, please make sure to hit that subscribe button, and while you're there, please hit that like button because it really helps out the channel a lot and keeps me motivated to make more videos like this. So not only does Jay make a profit on his trades, he actually has developed another income stream. If you think about it, eToro gives copy traders, the people that are actually being copied, a percentage of the actual value that people are bringing onto eToro. Now, why am I telling you this? Because this is something you can do as well. So once you're a very good trader, you can actually sign up to eToro, and people will essentially start looking at your trades and thinking, you know, this guy's making a good return, and then they'll start copying you. Now, it's free for people to copy trades, but on the other hand, the people getting copied make money from eToro. Jay makes around 2.5% fees from eToro for letting people copy him, and his incentive is that he keeps making money for his investors. More people will start copying him, and he can make more money managing those investments. As long as he's making money every single month, eToro will give him the 2.5% fee spread out across the 12 months. So there's actual reports that say he manages around 100 million. So 2.5% of 100 million would be around 2.5 million. So if you divide that by 12 months, he will be getting a £208,000 salary every single month just for letting people copy his trades. Now this is something you guys can actually get into as well. And from this standpoint, eToro is quite open for people to actually sign up on there, as long as they're good and people will actually start copying them. Now trading is all about percentages, right? So even if you start with lower amounts of money, if you let people copy you and they can see that, okay, this guy's making 10-20% a month on month, then these things will add up. Moreover, people with more money than you can actually copy you, so it presents a very good opportunity for you to get into. Guys, eToro is actually changing the whole hedge fund game. It reminds me of the picture of the meme you see on Instagram where it says that Airbnb is the biggest hotel chain but it doesn't have any properties that it actually owns, or Uber is the biggest taxi company but it doesn't own any actual cars. It's like eToro is the biggest hedge fund, but it doesn't actually manage people's money, because people on eToro themselves, like Jay, manage other people's money for them. Now, there's definitely a lot of advantages and disadvantages to copying. First being that if you copy someone, you aren't in control anymore. My initial reaction is that, what if the person just goes all ham and just goes mad? You start copying him, you start making a lot of money in the first couple months, and then he just goes mad on GME or some mad crazy stock. You can potentially lose the money you gained across the many months just because this guy you were copying just went a bit mad. But then again, it's all about due diligence, right? So if the person who's being copied so much, like Jay has, he's going to be less likely to actually do that because he's smart and he's got a track record, he's got people supporting him, and he's in touch with the community. On the flip side, the advantage of copy trading is that once you hit the copy button, you don't really have to do anything. Jay does all the research, there's no input from you at all, which is pretty good, I think, for someone who's a beginner who's trying to learn the ropes of trading and does want to get in the market straight in, but then she doesn't have the knowledge to trade on their own. Also, copying is free. You only pay the spread on eToro. There is no commissions associated with copying or any commission based on the return you're getting. It's simply just hit the copy button and you're good to go, really. So it's good to know that you're not going to be losing out on a commission basis, because that would incentivize traders to make a lot of trades and get eToro higher percentages of returns. Now, Jay does have some historical data to show that this guy is sort of good at his role. He started in just 2014, which is around 6 years of full year results. Now, some people may argue that 6 years is not enough time for somebody to judge whether somebody is a good investor or not. Why is that? Because he hasn't been through the entire economic cycle, which a large hedge fund might have. Also don't know whether Jay can actually withstand further cycles down the line. But other people may say that, well, considering what happened in 2020, Jay did make a good return. He might be good from that standpoint. It's entirely up to each and every person's risk appetite, whether they want to copy Jay or any other trader. Now, it certainly helps doing due diligence when actually deciding who to copy. Now, the first thing I would do is look at somebody's historical returns. Now, let's actually deep dive into somebody else and see their historical returns. So we can see on this screen that all the people we can copy in the UK. Now, if we filter by returns, we can see that this guy called Liam Kedge comes up. He seems to have a very, very high amount of return. If we click on Liam's profile, we can see that he has 50k under management and 34 copiers. If we look into his profile, we can see that Liam is 20 years old and he's studying accountancy. Now, if we hop onto the chart, we can see that this guy, Liam, has only been doing this for a couple months. A couple months in 2020 and a couple months in 2021. For me personally, knowing this amount of information, I would like to see a little more consistency and a little more months down the line of Liam making a good return before I can decide that, hey, I'm going to start copying Liam. I hope that Liam can make those kind of returns or even a consistent good return in the next couple months. Then he will be getting a larger amount of people copying it. Now let's take a look at Jay's profile. We're not going to look at each individual stock, but we're going to look at the entire portfolio as a whole and take out some key takeaways that we can actually use for our own benefit. Right off the bat, we can see that Liam holds a lot of securities, 50 plus in fact. So one little tip I would like to say for any of you guys watching who are not actually trading full time is that you shouldn't be holding more securities than you can actually keep up with. Now Jay's doing this on a full-time basis, so he has a lot of time on his hands to actually go about research onto these securities and actually see whether on a consistent basis that, hey, should I be closing these trades, should I be taking my profits, should I be dumping this investment. If you don't have the full time on your hands, you probably shouldn't be having 50 plus positions because you won't be able to keep up with all the news, and you might miss out on some key points which may drastically impact the wider returns on your portfolio. However, there's one caveat to that, and that is index funds. Now, index funds historically have 300 plus or 500 plus stocks you're going to invest in, especially in the S&P 500 or the FTSE All Cap stock index, which has the entire stock market. Index funds automatically calibrate their positions based on rules, so you don't actually have to manage an index fund. You're not going to be selling and buying ETFs such as the S&P 500 all day. They're a completely separate class to active investing, where you're actually looking at different individual stocks. So I wouldn't count that when I'm talking about holding large amounts of stock. We can see on Jay's profile that Jay's buying a lot of Bitcoin. He seems like a crypto enthusiast, and the whole crypto market is turning with him. In fact, his portfolio is quite diverse, but he has 13% of his investments in cryptocurrency. But we can also see that cryptocurrency is the most traded asset on his portfolio. That means he's buying and selling a lot of crypto. 3 of some of the biggest gains on his portfolio are actually cryptocurrency. Firstly, we have Binance, which is a cryptocurrency exchange like Coinbase where you can buy and sell crypto on. Then we have direct investments in Bitcoin and Ethereum. Now, that's interesting to say the least. Now, if we drop down and see his stock portfolio, we can see that Jay doesn't actually see himself as an industry-based investor, meaning that he doesn't actually invest in one particular sector in the economy, such as finance or technology. These stocks are quite diversified, which is a good thing because swings in certain industries can impact your portfolio if you're just industry specific. Like for an example, Jaynemesis has an investment in Six Flags, which is a theme park in America, right? But he also has investments in PayPal. So you can see the contrast of his stock portfolio. Now let's deep dive into his methodology. If we see from his bio, he only invests in long-term hold, which is always a good investment strategy in my book. He only trades stocks and crypto, which means no forex. and he doesn't do shorting very much, which I can personally agree with. Shorting carries a huge amount of risk, which we have seen recently. So, I've always been an advocate of avoiding shorting stocks, so I can see eye to eye with that. Now, if we deep dive into historical data, he made a loss of 53% in 2018. Now, if you don't know, if you make a loss of 50%, you have to actually make 100% to actually gain a break even. And with making that loss, he could have just left eToro and packed up his bags, but it seems like he was quite adamant to get his money back for his copyists, which he did end up doing across the next years. In fact, he is up just 7% in January alone this year, and around 8% in February, which is not actually over yet, so it could be room for more growth or decline. Guys, personally, I think it'll be very interesting to see how Jay's plays out in bearish markets and how he does in the next 12 months. Guys, there's definitely more to discuss with Jay and other eToro traders. Let me know if you want me to do a part 2 of this in the comment sections below. You might want to check out my video here where I talk about the top 5 ETFs you can actually go about investing in 2021. Or my video here of where I made around £5,000 investing in just 2 trades. Aside from that, thank you so much for watching, and I'll see you next time.